Hi everybody, BlogTech Eve here. Hope you're doing well today. And in today's analysis, we're going to touch on Bitcoin and Bitcoin's price action. And we'll also be taking a look at the stock market, just kind of overall, just because at this point, I think it's necessary once again to analyze the stock markets with Bitcoin. And this is the same strategy that we had when we had worked up towards our 4.236 target at the time. Somewhere in last year, we also used the stock markets and the index funds to get to this target. And now we'll be using the same method to see if we can find a correlation and kind of like, what levels we could be expecting a bounce on. If you have been watching my publications for a while, you'll know that from the start, pretty much from over here at 40,000, I haven't really been convinced for a reversal. There's a couple of posts on that because at that time I saw something that kind of looked like a head and shoulders pattern to me. And I'd anticipated the end of the pattern to be somewhere from this zone over here until 29,000. All right, and at that, some of the earlier posts, we had also discussed that this is also quite a good reaccumulation zone in terms of Bitcoin for a longer term perspective. All right, so obviously we woke up to some pretty bad news politically this morning, and as you guys know, it's the whole Russia and Ukraine thing. And in terms of the markets, there's always a reason for why the market is crashing. All right, so that is of course the reason why everybody is saying that Bitcoin is crashing today, but the reason is really quite irrelevant. I think I've definitely not been convinced since a reversal over here and an extended bear market before we start our new cycle did seem like the most possible, most likely thing to me. So at that point, we were kind of discussing, something like this, and then we will. I will link the related ideas below. You can just go check out exactly kind of what we had going over here. Obviously, now not of course like this, but we had something similar. And what we said was it could take some time, out to the side where we go up, down, side, up, down before we eventually start our next cycle. However, the point of all of those analysis were to just be ready, when it turns around, it will turn around unexpectedly as it always does. But for now, by looking at the technicals in the 3-day time frame, it seems very likely that we could come very close to 29,000 again. That would be just from judging the charts at this point. Obviously, excuse me, the market is in a bad state at this point. There's no buying pressure, predominantly selling pressure. Of course, there will be some bounce at some point. What we could maybe see at some point would be something that get up like that, or it could go 100 different ways. All right, now we're going to go to the Vanguard Total Index Fund, the same fund that we had used to get our Bitcoin target from last year for the 4.236 Fibonacci extension. And what we'd seen over here is that, well, pretty much since February, I guess, 2009, the chart has just been increasing exponentially. We'd also made a separate idea on that and money printing and inflation. You can just go through our channels. You'll find a couple of ideas on this. And the first real pullback that we have actually seen was with the announcements of lockdown. And that was roughly over here. And the percentage, and it also very conveniently, we were just underneath the long term 3 Fibonacci extension, and we fell perfectly down to the 1.618. All right, so in the markets, of course, there's always a reason, but very conveniently, how the reason seems to be exactly at, a full Fibonacci extension. And of course, we get these levels by starting at the top, dragging to the bottom, trend-based Fibonacci extension. All right, so this is not me dragging in these levels. These are kind of, can I say, pre-populated levels. Very convenient, once again, now that the price action turns around just under the 4.412 Fibonacci extension level, and also the political situation going, hand in hand with a reason for liquidating markets. All right, so back in when the lockdowns were announced, what we had seen in the across the stock market at that point was basically a 36.5% drop. All right, let's say a 36.3% retracement. That was what we were looking at. And if we'd had to see, well, it's kind of also, like a world crisis, I guess, at this point. So let's say we had to go down another 36%. That would once again lead us to nearly exactly the 2.618. All right, that's 35.88. All right, very conveniently, very close to another Fibonacci retracement level. Of course, this could be a very long term play. For example, what could happen here is on the 3.618, we could see a nice bounce. We could get rejected at the short-term resistance that we now have over here. We can fall halfway. We could come back up to the 3.618, which would then be our resistance. And then ultimately, kind of like stepping down. I don't want to put a timeline to it, but just so you can see, it can take time. It can take time to get there, before we see our reversal. And the reason why this is completely random, but I mean, this is this is very long, because obviously we're in the 1 month time frame. I'm not going to say it's going to take 4 years, but if this was a shorter chart, like a 1 week, this could take a couple of weeks for us to eventually reach the bottom and turn around at whatever point we would need that in the market. So just don't look at these dates. Obviously we're in the 1 month time frame now, so that's a bit excessive. All right, but just keep in mind these numbers. We had a 30% drop over here, kind of like a world crisis. We're seeing something similar again. I would expect kind of a bounce over here, but once again, we could bounce and then just carry on lower. And if we had to do another 36% down, we could be looking at the 2.618 Fibonacci level. All right, now what does this have to do with Bitcoin? Well, of course, following institutional behavior, because that is where all of the money is for Bitcoin. We'll just go to the 3-day time frame because we've got a little bit less data. And from the 3-day perspective, you can see that we had already lost our 2.618 zone. All right, our 2.618 is now trading as our resistance. And when the lockdowns were announced, let me just get that. I'm going to go back to the 1 week time frame. Compared to, go to the month, compared to the Vanguard, where Vanguard lost basically 36%. All right, we're looking at over here, March 21. All right, so we'll be dragging the candle from there. Let's say even the month after that, I'm going to work with like a month. So the month after that, where Vanguard lost 36%, Bitcoin also once again dropping all the way to the 1.618, had lost 53%. All right, so that's quite a lot more than what the Vanguard fund lost. Currently, if we had to draw in another 53% for Bitcoin, that would put us pretty much where we are trading now, a little bit lower at around 32,000. All right, which is very, very close to 30,000 at the 1.618. All right, there's basically a 2K difference. So it wouldn't be surprising now, if we go back to the 3-day time frame, to complete the head and shoulder pattern and to turn around at this baseline support over here at the 1.618 at 30,000 or 29,000. Right, that's kind of what we started off with. So just the thought process of how we got there. Once again, it is not necessarily just a straight line down and a straight line up. Of course, that would be ideal, but it's never quite that simple. So what we could do is we could do something like this. Once again, see a bit of a bounce here, come back up, get rejected at 40,000, and then go down to the 1.618, maybe slightly below, before we see a decisive turnaround. And this could also take some time. All right, of course. So that's just to point out that it is not necessarily just, we're going to go down in 30 and then come right back up. It could be an extended liquidation depending on, it's going to turn around when it turns around. Probably when it seems at its worst is when we can be expecting it to turn around. All right, guys, and that's going to be what I'm going to be finishing off on. I'd expect some sort of price action to turn around here in line with the Vanguard price action that we have just analyzed. Kind of be looking at the percentages in relationship with each other, some bounces in between. But for now, it seems highly likely that we are just not done with this quite yet. All right, and that's it from my side. Feel free to follow back here for daily updates, and be sure to check out our channels if you're looking for additional content. Cheers.